Hello everyone, good morning. Welcome back to my YouTube channel. It's been quite a while though. I think the last time I dropped a video here, it was I think 5 days ago, right? That was I think around PPI. That should be Thursday last week. That's fine. So let's dive into what we have today. Last time I was calling price here, I was talking about the possibility of price running sell side liquidity somewhere around here. Okay, yeah, possibility of price running liquidity. Let me show you guys on the daily time frame. So I'll come back to the weekly soon. So I was looking at price trading from an inversion fair value gap on the weekly time frame. This is this fair value gap here. We're looking at price trading from it, then lower, okay, into lower prices. You can check my last video, it's there. So, but we didn't get that here. Okay, we didn't get that here. So I'll show you guys what we call engineered liquidity today. Okay, that's what I was thought I'm going to point out on this chart today to show you how it works, so you can also apply it while trading and know that it's obtainable also. Okay, there are possibilities if you know what you're doing. Okay, so first, for this week, I remember last week I called this level, I called them 19,104.6 and other levels also, okay, which is lower on this US 100, but we weren't able to get all of them. Okay, this low was protected. So this is a new week. This is a FOMC week also. Today is FOMC. Today is Wednesday. FOMC. I'm currently making this video on London section. So you can see this week, you can see how price went higher and traded into the consequent increment of this long week. Okay, of this week here, traded into consequent increment of it and dropped. Okay, I would have made this video yesterday, but I just wanted to see how price traded first because I was watching this volume balance here and also I was watching this consequent recruitment here. Those are the two levels I was watching. So I was just waiting for a kind of a break, then I'll make the video. So I won't have to make it twice. Okay, or call price and start trying to explain it more. Okay, so first we are still working this order block, this long candle here. That's what we're still working right now. You can see how we rejected here first, and then we are attempting it again for the second time. Currently I am looking at this black candle. I measure from the low of the candle to the high of the candle. Okay, I'm looking at the consequent encroachment of this other block. That's what I'm looking at. Okay, as a kind of a draw liquidity. I'm looking for price to break through it. Okay, that's a target for me because I'm not looking for price to bounce from here and start going higher. At least not now, not until proven otherwise. But for now, I'm seeking lower prices on this pair. Okay, I'm currently seeking lower prices on this pair. So now, having that in mind, I am okay. That's the target we are looking for lower. So now, let me go to the lower time frame and show you guys this daily time frame. Initially I was using the weekly time frame fair value gap as an inversion, but right now I had to change to using the daily fair value gap also. Okay, I changed to using daily fair value gap right now. So I left the weekly inversion fair value gap and then entered to daily fair value gap. So my chart won't be clustered a lot. So having that in mind, this is the fair value gap on daily time frame. This is the low or the fair value gap, and this is the higher fair value gap. So price ran through it and then traded into the consequent increment of this long week here, and then we had a drop lower back into it again. Okay, so this part of the reason why I decided to then make this video. This was the low we were expecting price to take out last week, but we failed to take it out. Okay, and then we ran back into the range. This is what we call engineered liquidity. This is what we call engineered liquidity. A situation where price comes close to a take profit target, then runs all the way back to take out people or to make people who are holding the position from the beginning to feel like the price is reversing on them. Okay, and then it's going back to hit that target. That's the scenario we're having right now. That's the engineered liquidity. Okay, scenario. That's why I'm expecting price to run this. We have this relatively poor lows. I saw price going back into this range as a return into 50%. That is a kind of return into premium, then premium raise, then drop, okay, back into the target. Okay, so that's what we're looking at right now. So let me go down to the 4 hours time frame and explain it better. Okay, this is the 4 hours time frame. This is the return into the consequent encroachment. This same period again, you see the consequent encroachment, you see this long week on the 4 hours time frame, you see the consequent encroachment here, that same level. Okay, so price returned to it and then broke lower. So right now I'm seeing this as the kind of price taking out buy side liquidity here, this high and this high, taking it out here, trading into the consequent encroachment of this week, that is the premium array, and then breaking lower. So when we have price trade into discount into premium array here, that is, I'm looking at the lower portion of this daily fair value gap, which is this. Let me move this. So looking at the lower portion of it for price trade into it, then we drop lower. So that's what I'm looking at. Checking it on the 1 hour time. It was trade that took yesterday. My chart's kind of dirty. It's during the week, so whenever I do this during the week, it can be like this sometimes because I've been trading also. Okay, so I'll say sorry about that though. So let me go back to the 4 hours time frame. So I'm looking for kind of a return into the premium array here, okay, and then drop lower. Today is FOMC, so while trading, you should be careful while trading, okay. Don't trade ahead of FOMC. If you have positions before then, it's best you close it because the volatility can be so wild. You can be slipped, okay, at any time, and that's not what you want in your charts. Okay, that's not what you want at all in your charts. Okay, you are in your trading, sorry, because slippage can be very crazy sometimes. So you should have that in mind. So I'm looking for lower prices to this engineered liquidity. Okay, looking for that same price, that is 19,104.6 and lower. Okay, and then consequence of that daily, weekly order block. That's what I'm looking for on this pair. Okay, let me go to the next pair, which is the US 500, because I'll be touching a lot today though. I have a lot on my list as you can see. So still the same scenario. I'm expecting price to drop from here. I like the way it traded into premium array here, traded into this week also, and then rejected lower. I'm still using the inefficiency on the daily time frame, on the weekly time frame here, looking for this level lower. That's lower portion of this. I'm looking for this level also. One, I like how we traded into the consequent encroachment of this order block here. So now I'm looking for price level lower to take out this low. Okay, take out this low at 5,502.5. That's first level. Then lower. I'm looking lower though, but I want to take out this first. Then probably we could, if you extend harder, then we can get to the 5,385.1. Okay, so on daily time frame, see how you have same scenario traded. See how the bodies are respecting this inversion. Okay, and then broke lower. So kind of expecting same scenario of trading to premium array and then continue dropping. But if you can see here, we took out this low on that last week. Okay, the target on this pair was hit last week. You can see, but we didn't get that in the US 100. Okay, that's what we call engineered liquidity, because on these pairs it took it out. So some people can be seeing it as okay, you can also frame it as a kind of smart money, as a kind of SMT divergence. Okay, just to take this run high, to take out this high, not just kind of for reversals. Okay, so you can see it as an SMT divergence to just take a run higher. That won't be bad though, but for me, I saw it as kind of engineered liquidity. Okay, price taking out low here, and in the other side it didn't take it out. Okay, only to trade back to run this and come back again for it. Okay, so that's what I'm looking at, kind of retracement into premium and then drop for these levels. So I'm still looking lower on this. Okay, so looking lower on this same price levels are called out. That's what I'm still looking at on US 500. So let me go down to the US 30, the Dow Jones. So you can remember last time I was calling price, I'm calling how we can get lower into this and also trade into this level. Okay, am I right? Okay, yes. I also called lower levels here also on this pair. So currently I'm looking at this inversion fair value gap here. I like how we returned here, and I'm going to daily time frame. Currently, I would have loved to see price hits go into this inefficiency right here. That's what I would have loved to see. Okay, I would have loved to see price break into it at least, so it will give me a good confidence on sell. Okay, on the other averages, which is the US 100 and the US 500. So for me, I still feel this high is reasonable to trade into. It's relatively low highs and this inefficiency. You can just trade into it and then get a sharp drop. But I don't trade it Dow personally. I just call it sometimes based on people ask for it. So sometimes I just give it for the for the channel, so it can help you guys also to trade during the week. So for me, I would say that maybe a run into this won't be bad, but not like I will be looking for the run up there. But if I'm able to get that, I think I will then engage on the sell will be proper for me. But for now, looking for lower prices, this inefficiency looks good, and then drop into this sell side liquidity around here. So I'm looking at on Dow Jones for targets. I'm looking at 40,651.1. That's what I'm looking at. Okay, on the Dow. So with the other conference we have, and also looking here, you can see that the Dow took out its low also. Okay, so that took out its low also. So let me show you guys what I mean by that. See this low? It was taken out here by this run here on the US 100. This low was taken out on the US 500. This low was taken out, as you can see, and on the US 100, this low wasn't taken out. Okay, so that caused the run into the premium array, and then we're about going to take it out again. Take this low out here. Now it will be very aggressive, very aggressive. You hear me? This type of scenario when you have price like run through this aggressively, okay, and then start shooting lower. So that is it for the US 100, US 500, and US 30. Today I included gold today though. I was kind of expecting a retracement into this breaker. I would have called gold today though. This was one of my targets and it's already been hit already. On Monday I was expecting this level, but I was thinking probably if you got a kind of retracement into this course, it's already high to buy. Although I know this is the target, but probably if you were able to get a retracement into this, I should have been calling gold higher right now. But as you can see, gold being gold, it did its thing, but that's still fine though. So let me go to the DXY. So now, remember the last time when I was calling price on this, I have talked about the possibility of us running sell side liquidity here, which we did. Okay, and now we see how we ran also into these relatively poor lows here. I like that. And now currently we are kind of in consolidation. So let me go to the weekly time frame and show you guys. These are inefficiency on the weekly time frame here, and that's where price is right now. Okay, so for me right now, I think it would be reasonable for us to have a kind of a little retracement right now, so into this range. That will be proper. Okay, and then maybe resume lower. Okay, so that's what I'm kind of expecting. So reasons for that is that going to the daily time frame, we took out sell side liquidity here, relatively poor lows, and now we're kind of consolidating. Okay, so now this sell side liquidity here, you see how we ran it on this pair, on this DXY, and let me go to GBPUSD. Buy side liquidity was still kept intact here. This is November 5th or 6th, November 5th. Okay, high is still intact on the US, on the GBPUSD. November 6th high was taken on EURUSD. November 6th low was taken, or November 5th rather, 6th. I mean this swing low rather was taken out here on the DXY. So to me, this is kind of SMC divergence. Okay, so kind of getting a retracement into this range, probably 50% would be reasonable for me. Then for us to resume lower. So I'm kind of expecting a kind of retracement here. Measure the Fibonacci, high to low, and then probably around 50%. This fair value gap looks good. Okay, probably looking into it, a kind of institutional order flow into drill, or kind of just trading into it, and then leaving this fair value gap as a breakaway gap. Okay, so let me mark out what I'm doing. This kind of breakaway gap, breakaway. That's the kind. So I'm looking at this as a breakaway gap, okay? But expecting price to trade into this, then we can keep dropping from there. But for now, retracement is reasonable with this SMC divergence that I called. Today is FOMC, so anything can happen. Price can just drop low and just keep dropping. It's very, very possible, okay? But it's reasonable for us to get a little bit retracement to around this level, okay? I would say around 105.424 would be reasonable for a good retracement, okay? Then we trade into this fair value gap also, then we can have a good drop. I would like that. So I'm looking at this as kind of a draw. Let me use, what will I use here? Let me use a good emoji. Yeah, okay. I like this as a draw. Okay, I like this as a draw. Then drop, keep dropping lower. So let me drop to the EURUSD. So if we are looking for a drop on the GBPUSD, on DXY, we are looking for a buy on DXY. It's reasonable for us to get a drop here on EURUSD. Okay, that's because those pairs they correlate. So I'm looking from this swing low now to this swing high. 50% is somewhere around here. So price dropping into this inversion fair value gap on the weekly time frame would be reasonable. Below 50%, you can look into this also. Okay, here is a breakaway gap. I don't want to see price trading into this at all. So everything we have should be somewhere around here. Okay, so that drop would be reasonable because of the SMT divergence here. Also, we can just open and today is FOMC, so you can just start shooting up. It's a very big possibility. You should have that in mind also while trading. So this is SMT. Okay, so this is SMT. So also I'm looking at this kind of a true drive pattern, and kind of running. You see how price is pricing higher. It's just like kind of is on a trend line, kind of trend line liquidity. Okay, bouncing. You see trend line liquidity. So when I see things like this, I like opposing it when it's going against my money. You can see how price is bouncing off trend line, bouncing off here. So people want to buy here also. Okay, but when they oppose us as smart money traders, and on a day like this, there's a very possibility that we'll have that dive lower. Okay, it's very, very possible on this EURUSD. So I'm going to GBPUSD. Okay, yeah, GBPUSD. So right now, I'm expecting the same scenario because first, looking at this high was not taken out. So this is SMT divergence. Okay, so I can see something like true drive pattern also high, higher high, higher high. This third high. So kind of expecting the third high or somewhere around it to create the drop lower into the range. Okay, leaving this high intact possibly. Okay, so having that, if that would be a possibility, I mean, we are kind of expecting price trading to 50%, somewhere around 50% would be reasonable to resume price higher. Okay, so we can look into this also and stay at this fair value gap. That's where I would like all of us to stay. Okay, we looking into this can be reasonable also for higher prices to continue. Okay, I don't want to see price trade into. I don't want to see price trade into this fair value gap at all. So this is the breakaway gap here. Everything we have is this fair value gap and this one also. Then that should send us higher. Okay, see higher prices. So I think I've covered everything I have for today, and I wish you guys good trading week ahead. That's all for today, guys. So have a nice day. Please don't forget to like, share, and subscribe. On this channel, I talk about core price levels on these charts on this channel. and I'm building a very big community. So if you guys will help me share and like this video, it will help me also and encourage me also to put more of this out and help people in their trading uh, journey. Okay, help people in trade. People who find it difficult to see price directions. Okay, this channel is for you guys. So I hope you guys even people who are new in trading, newbies. Okay, I think this channel is also for you, and people who are even actively trading, this channel is also for you guys. So you all are welcome to share the video. What will be this wonderful community together? Okay, I wish you guys good trading and have a wonderful week ahead. Happy FOMC. If that's the thing though. But I wish you guys good trading for the week. Have a nice day, guys. Bye bye. Peace.